Switching subjects, has the cut in interest rates confused you in any way? I'm going to be honest, vulnerable here, and say it has confused the heck out of me. It has just confused the heck out of me. And are they fluctuating up and down, or are they mostly trending up again? And the answer is that ever since the Fed cut interest rates a month ago, interest rates have been trending up. How in the world does that work? Well, Carolyn in Milton wants us to tell her that how interest rates have not come down and have actually gone higher after the Federal Reserve cut interest rates. Finally, been expecting it all year. They were expecting it as early as May, and it took till September to get it. But how does the fact that the Fed cuts rates, how can that not help mortgage rates? The reality is this: that cut did help mortgage rates, but it was before the rate cut was officially made. Now, the Federal Reserve rate, or what's called the Fed funds rate, is the rate, and it's the U.S. government. It's not really, it's a separate entity from the U.S. government, but we all know where all the funding and everything comes from. It's the U.S. government. It is the rate at which member banks of the Federal Reserve loan money to other member banks. So if it's 4 or 5, and it's in that area right now, that means when Bank of America loans money to Wells Fargo overnight, or some short-term something, that is the interest rate that is charged. Now, immediately when the interest rate dropped, we started seeing the interest rate on auto loans, the interest rate on credit cards go down, but mortgage rates actually stayed the same when the Federal Reserve cut the rate. And it's because everybody, when I say all the players in the mortgage market, they had already taken the fact that the Federal Reserve is going to decrease their short-term interest rate, and they had already made some adjustments in the market. And when I say they, I mean investors who buy mortgage-backed securities, because it is the amount of money people are willing to pay for mortgage-backed securities at a certain rate that determines what rate is actually being charged. Mortgage interest rates are not set by the Federal Reserve. They are set by the yield on the 10-year Treasury bond. Why? Well, an investor from South America could invest in U.S. Treasury bills, a 10-year Treasury bill, or they could invest in mortgage-backed securities, which would be considered the two safest investments. I'm not saying they are. I'm saying that they would be considered the two safest investments. And so it is the yield on the 10-year Treasury bond that sets the mortgage interest rates. Carolyn says, well, should we not move forward on our purchase because interest rates are high? And I say, well, there's a lot more opportunities out there to buy now, so I don't know that I would be too concerned with getting a 6.5 interest rate or a 5.75% interest rate. I would be more concerned in getting the home locked down while there was not so much upward pressure on pricing, which between now and January, February, maybe March will be the ideal times to do that, so that as rates continue to come down, and I believe they will, I'm not clairvoyant, I don't have a crystal ball, but as rates continue to come down, you're going to get millions of buyers who will jump back in the market, and a market where you're like, hey, I got a pretty good oomph here as a buyer. I can convince a seller to do things, which you could do right now. As soon as many other buyers get into the market and you start having 10 offers on the same listing, you might have to pay $20,000 or $30,000 more for a home in June this year than you could have paid earlier in the year. It is so important to understand the nature of the market. And right now, opportunities for buyers, still a good market for sellers as well.